Dear students, today we will discuss illustration on underwriting of shares. This video focuses only on the numerical illustration. The theory part is already covered in short videos. If you have not seen them, I recommend watching those first. So let us begin with the illustration. This is a simple problem on partial underwriting when marked applications are given. A company issued 40,000 shares of 10 rupees each for public subscription. Three underwriters are there, P, Q, R. P, number of shares underwritten 25%. Q is 30% and R is 40%. You can see here the percentage that they have taken 25%, 30% and 40%. Together it is 95%. Right? So here underwriters they have taken 95%. So another 5% will be taken by the company itself. Okay, in the solution I will show you. Next, marked applications they have given in the name of P is 5,000, Q is 6,000 and R is 4,000. Okay, so now the company received applications for 30,000 shares. Ascertain the net liability of each of the underwriters. So how much the company has received the application? They have received for 30,000 shares. How much they are issuing? 40,000. At the end you should get 10,000. Okay, remaining balance should be there. So let us see the solution. So statement showing net liability of underwriters. So here you can see we have taken the gross liability. What is the gross liability given? In the case of P, it is 25%. In the case of Q, it is 30%. And in the case of R, it is 40%. Right? This is a liability given. So totally how much company is issuing? 40,000 shares. This 40,000 shares has been divided. 25% for P, 30% for Q and another 40% is for R. And what is the remaining percentage? That is a 5%. 5% company is taking. So that is 2,000 shares. Remember here, for unmarked application, in case of partial underwriting, the whole unmarked applications will be considering for company. Okay. So, what is the unmarked application we have? Here, how you come to know what is the unmarked applications are remaining? Is a shares issued 40,000. But how many applications are received? 30,000 applications are received. In these 30,000 applications, marked applications they have given 5,000 shares in case of P. Okay, in case of Q it is 6,000 and in case of R it is 4,000. So totally 15,000 marked applications they are receiving. So out of 30, 15,000 will be the marked application. So how much is remaining? Another 15,000. This 15,000 will be the unmarked applications. Okay, this is how we have considered. So the balance is P 10,000, Q 12,000, R 16,000 and in case of company 2,000 was the liability but unmarked applications they have received is 15,000. So they are getting the minus balance, excess balance they have, right? So this will be going to distribute among the other underwriters. Okay. So likewise, if you get excess amount in any of the other underwriter, so likewise only you have to transfer or distribute the amount to other underwriters. Okay. So here in case of P, Q, R in the ratio we are dividing. Okay, you can take so 5 is to 6 is to 8. So based on their gross liability, the ratio has been considered. Okay, 13,000 rupees we have distributed. Now balance is 6,579 in case of P, 7,895 in case of Q, and 10,526 in case of R. So totally 25,000 rupees is the balance. And less marked applications. How much marked applications? 5,000 for P. Q is 6,000 and in case of R it is 4,000. So totally 15,000 marked applications are there. So what is the net liability remaining? So here only you can see 10,000 shares are the net liability. In case of P it is 1,579. In case of Q 1,895 and in case of R it is 6,526. This is how you have to calculate the net liability under partial underwriting. That's it for this problem. If you have any doubts related to this illustration, please write them in the comment section. Thank you so much.